Good day, Junior Techies. I'm Mrs. Brimmercombe. We are going to look at adjustments, where the focus is going to be on depreciation and asset disposal. Depreciation is always calculated on equipment and vehicles because the value of equipment and vehicles decreases over time. Depreciation is an expense which will be debited, account credited, accumulated depreciation. Remember, accumulated depreciation is a negative asset. But when we look on the accounting equation, if that negative asset, if that accumulated is credited and it increases, it will have a negative effect on the owner's equity. Always remember, when we're calculating depreciation, on what we've sold is always from the beginning of the accounting period until the day that we have sold it. When we calculate on the new, it's from the date of which we purchased it until the end of the accounting period. The old and the remaining is always equal to 12 months. Asset disposal. We are going to go through the steps with regards to asset disposal. Step number 1, take out the cost. To take out the cost, it means that the tangible asset is going to be credited, account debited, asset disposal. Step number 2, update the depreciation. When you update the depreciation, it means that depreciation will be debited, account credited, accumulated depreciation. Be aware that you can do step number 2 first and then complete step number 1. I prefer, especially when I'm doing the general ledger accounts, to do step number 1 first and then step number 2. The third step, take out the total accumulated depreciation. So to take out the total accumulated depreciation, it means that accumulated depreciation is debited and asset disposal is going to be credited. When we talk about the total accumulated depreciation, it means that it's the balance in the beginning of the asset which I'm disposing of plus the updated depreciation. Step number 4, record the selling price. To record the selling price, asset disposal is always going to be credited. Account debited will depend on how that I sell my asset. If I sold it cash, my details will be bank. On credit, debtors control. Traded in, creditors control. If the owner took it over for personal use, drawings. If we donated it, it will be donations. So it doesn't matter how I sold my asset. Asset disposal is always credited with the selling price, and how I sold it, that account will be debited. Step number 5, calculate the profit or loss on disposal of asset. So when we look now at the asset disposal account, cost minus accumulate equals the book value. If I sold it for more than the book value, it means that we made a profit on the disposal of the asset. If I sold it for less than the book value, it means that we made a loss on the disposal of the asset. Now, just a reminder, asset disposal is an account open and close on the day of the transaction. The profit or the loss on the sale of the asset will appear in your income statement. The book value will always appear in the tangible asset note. Activity 7. Required, complete the fixed asset register on the asset being disposed of. Prepare the journal entries for the adjustment. Narrations is not required. Post to the following accounts to the general ledger. So we have to open vehicles, equipment, accumulated depreciation on vehicles, and asset disposal. Then question number 4, complete the tangible asset note. So adjustment number A. Traded in an old vehicle on the 1st of January 2021 for $89,000 for a new vehicle. The business still owes the car dealership $211,000. The traded-in vehicle was bought on 1 October 2017 for $200,000. No entries have been put through to record any of these transactions. So this means that I will now need to update the depreciation from the day that we purchased it on the 1st of October 2017. My advice to you in a test and an exam, if they don't ask you to do a fixed asset register and you see this type of adjustment where I need to update the depreciation, open up a fixed asset register. You don't need to write all of those details, but write the date, the depreciation, accumulated depreciation, and the carrying value. Especially, they say to us, vehicles is depreciated 20% per annum, diminishing balance method. Now, very important, in the first year, the accounting period starts the 1st of July 2017 and it ends June 2018. We purchased this asset, this vehicle, on the 1st of October 2017. It means for the first year, we need to calculate depreciation for 9 months. Doesn't matter if it's diminishing, because it's the first time that we're calculating it. So my depreciation is 50,000. The accumulated will also be 50,000. To get the carrying value or the book value, take the cost minus the accumulated depreciation, and that equals my book value. For the second year, we have to calculate it now for 12 months on the book value. There's the book value, 170,000 times 20%. My depreciation is 54,000. To get the accumulate, take the previous year plus the current depreciation equals accumulate. To get the book value, take cost minus accumulate, or you can take the carrying value at the end of last year minus the depreciation. It will give you exactly the same answer. For the third year, the accounting period will end 30 June 2020. Again, this must be calculated on the book value, 136,000 times 20%. So my depreciation, 27,600, plus the accumulate at the end of last year equals the accumulate end of this year. To get the carrying value, take the cost minus accumulate, or you can take the carrying value at the end of last year minus the depreciation. Now, my current financial year is July 2020 until June 2021. Now we need to calculate the depreciation from the beginning of the accounting period until the day that we have sold it. We sold it on the 1st of January 2021, so we do not include January. It must be calculated for 6 months. This means the book value times 20% times 6 divided by 12 equals my depreciation for this financial year. To get the accumulate, it's the previous year plus the depreciation of this year, and to get the book value, take the cost minus the accumulate, or you can take the carrying value minus the depreciation equals exactly the same answer. Completing now the opening balances in the general ledger. I can take the opening balance of accumulated depreciation to the general ledger. They said to me the date was on the 1st of July 2020. Be very careful with vehicles. Always check the movement. There was movement. We traded in one of our vehicles. This means we need to look for, has this been recorded or not? They said to us no entries have been put through to record any of these transactions. This means that the balance from the pre-adjustment trial balance is then the balance in the beginning. To record the asset disposal, step number 1, take out the cost. It means vehicles is credited with 200,000, account debited, asset disposal. Step number 2, update the depreciation. We've calculated that in our fixed asset register. Step number 3, take out the total accumulated depreciation on the asset which we're disposing of. There's my total accumulated depreciation. Where do we take it to? The asset disposal account. So accumulated depreciation on vehicles is debited, asset disposal is credited. Step number 4, record the selling price. We sold it for 89,000. Now we can calculate, did we make a profit or a loss? If we sold it for less than the book value, it means we made a loss. So you can take that 97,920 and subtract it from the 89,000. Or you can just take the debit side minus the credit side, and that equals 8,920. Now be very careful. We traded in one of our old vehicles for a new one. The selling price was 89,000. They said we still owe 211,000. So they didn't specify what was the cost of the new asset. This means we need to calculate it. And to calculate it, take the selling price, that which they gave us, and add it to what do we still owe. And that equals the cost of my new vehicle. Now we can calculate the depreciation on the new. To calculate on the new, it's from the day we purchased it until the end of the accounting period. That equals 6 months. The remaining or old, and this is sometimes difficult for learners, especially if it's diminishing balance method. How do I calculate it? A simple way. What is the book value in the beginning? To get the book value in the beginning, take the cost minus the accumulated depreciation. Then we're going to subtract the book value on the asset which we disposed of in the beginning. And then we times it by 20%. Why do we need to subtract the asset which we disposed of? Because we've already calculated the depreciation on that, and we only had it for 6 months. My total depreciation at the end of the accounting period is the old plus the new. To calculate the balance at the end, take the credit side minus the debit side. That equals balance carried down, balance brought down. The same with vehicles. Take the debit side minus the credit side. That equals the balance carried down, means balance brought down 700,000. To complete the general journal on 1 January 2021, follow this specific order. So step number 2, update the depreciation. It means that depreciation was debited, account credited, accumulated depreciation, and the total depreciation was 10,880. Step number 1, take out the cost. Asset disposal was debited, account credited, vehicles. Step number 3, take out the total accumulated depreciation. It means that accumulated depreciation on vehicles was debited, account credited, asset disposal. Step number 4, record the selling price. Creditors control is debited, account credited, asset disposal. Step number 5, calculate profit or a loss on the sale of an asset. So in my journal, we would take the 200,000 minus the total accumulate equals the book value. Subtract that from the selling price and that equals the loss on disposal of asset. To complete now the tangible asset note, we can use the ledger accounts that we've completed. Whenever in a test and exam you find it difficult to find the figures directly on completing the tangible asset note, draw a T account just to help you to make sure what is the figures that you need to calculate, where does what fit in. So if I look at the cost in the beginning, 600,000, it's the balance in the beginning, minus accumulate in the beginning, cost minus accumulate equals the book value, plus additions, the 300,000, minus disposal at carrying value. It should always be at book value. Show your calculations in brackets. My total depreciation is that which we sold plus the old plus the new. Remember to add all of them. To get my movement, additions minus disposal minus depreciation equals my movement. Carrying value at the end, take the carrying value in the beginning plus the movement because there's no brackets. To get my cost at the end, take the cost in the beginning plus additions minus the cost on the asset which we disposed of equals the cost at the end, which is exactly the same as the balance in the general ledger. To get the accumulated depreciation, we can take the cost minus accumulate, or we can say accumulate in the beginning minus the total accumulated depreciation on the asset which I dispose of plus the depreciation equals accumulate at the end, and it provides you with exactly the same balance. If you take your cost minus accumulate at the end, it should equal exactly the same carrying value as calculated earlier. Then you know that you've done this correctly. If we now look at equipment, a partner, Donald, contributed additional equipment worth $38,000 on 30 June 2021 as part of his capital contribution. This was recorded. The depreciation rate on equipment is 10% on fixed installment method. Now, as mentioned earlier, always start with the movement. 38,000 was contributed at the end of the accounting period. This was recorded. It means that additions, capital, Donald, 38,000. In my tangible asset note, I'm also going to indicate it 38,000. This means that the balance from the pre-adjustment trial balance is the balance at the end. Balance brought down means balance carried down. So in my tangible asset, this will be the balance at the end. To calculate the balance in the beginning, take the credit side minus the debit side. That equals the balance in the beginning. When we're doing this directly on our note, we're now going to work from the bottom to the top. So take the end, minus the additions equals the cost in the beginning. Accumulated depreciation on equipment on the 1st of July 2020 is given to us. Cost minus accumulate equals carrying value. If you see that the carrying value is this low, red light should go off. Depreciation must be calculated on the old, the new, plus that which we've sold. We didn't sell any equipment. Yes, there were new equipment that was contributed, but this was on the last day of the accounting period. This means that we're not going to calculate any depreciation on the new for this accounting period. If we calculate it on the old and we take 180,000, which is the cost in the beginning, and we times that by 10%, it equals 18,000. That is more than the book value of 6,000, and that is a problem. So to calculate the depreciation then, take the balance in the beginning, the carrying value, minus 1, and that equals the depreciation for this accounting period. To get my movement, additions, minus the depreciation, carrying value at the end, carrying value in the beginning, plus the movement equals carrying value at the end. To get my accumulate, take the balance in the beginning plus the depreciation equals the accumulate at the end. If you take the cost minus the accumulate, it will give you exactly the same answer. Completing the General Journal on 30 June 2021. It means that we need to show the depreciation on vehicles, which was the old plus the new, and accumulated depreciation on equipment. If you add the two together, it equals the total depreciation. To show the additional equipment that was contributed, equipment was debited, account credited, capital, and the partner's name, Donald. Thank you very much. In our next activity, in activity 8, we are going to look at what happens if a bank statement is received. I want to leave you with this quote. If you are if you put your mind to it, you will achieve it. Have a wonderful day.